Good morning. Three things clients are focusing on today. It's going to be the pound, a little bit on European interest rates, mentioned gilts and short sterling earlier on in the week, and the impact on bond markets, and then also McDonalds suddenly leapt into focus. So first of all, the pound. This is the intraday short-term chart that we look at. It's a 60-minute chart, although it could be any intraday chart because we're looking at multiple time frame analysis. So support and resistance here is based on a half-day chart. This is the spot pound. We broke out in a news event, as quite often happens on FX. Does a lot of nothing, waits for some statistics, and then jumps, which makes it very difficult for day traders or short-term traders to get involved. But we can be patient, and the real thing here is the second circle is where it comes back to that breakout point. Did it to the tick, so pretty much perfectly. By the time the number was coming out yesterday, the price had already rallied 40 or 50 points from where the entry point was. So there's a chance that you could put a scratch or there's a stop or something like that if you didn't want to take some partial profits ahead of the number and then see what happens after the number. We broke out again. We again retraced a bit. It didn't come back to the breakout point. It stopped. The low was 34 and the breakout was 25, so it didn't come back this time. And we've extended higher, and in the short term there is no resistance. Not surprisingly, the key level is the breakout point at 132.25. Next is gilts, UK 10-year interest rates, highlighting the fact that we're interested in the signals at support and resistances, mainly black lines and blue lines. On gilts, on Friday we got to the final weekly resistance, and then we had one of our UFO patterns appear, and we closed below the third range deviation pivot down, so that shows an expansion of range. Yesterday, bond markets fell very sharply in Europe. We've had a slam dunk sell, and then also the 420-minute trend previously ended a little bit late. I would hasten to add, really, and we closed way below 3 down, so a real acceleration there, and you can see that on a few other markets. We'll just show the impact of that. This is the French bond market, so again you can see that blue square. Just going to transfer that over to the US Treasury market, and we've accelerated down. We never actually had a signal at the highs, but our final major support is 155.01, and the low yesterday I think was 02. Yes, bottom left there, the OHL low. So that's our reference point, 55.01 to 54.27. Close below there, and then we have what we call space to the next level. So that could open up some acceleration. Finally, we have McDonalds, and this is daily chart, and as you can see, a huge number of signals all on the same day. So that includes a slam dunk, time continuation, UFO, a massive expansion of range, a false breakout the day before above that weekly resistance, and then we've collapsed and we've closed below daily. So our next support is 151.77. So still another $4.5 away, $3.5 away. With stocks, like to have a quick look to see, is there a reason, is there results, just to get some sort of basic connection with fundamentals. The story was really about hurricanes affecting stores, which seemed to not really ring true, as McDonald's is a global corporation. So I had a quick look at more domestic stocks that probably are more affected. So Zoe's Kitchen is one. That didn't do anything. Dunkin' Donuts is another one. I think DNKN, if I remember rightly. And that didn't do anything either. So that story doesn't seem to ring true. There was a slight downgrade, worries about same-store sales. Right? Well, I don't know how it is in America, so do your own due diligence. But in the UK, they've changed the way that they serve their burgers. In the meantime, I'm just showing you a 60-minute chart of McDonald's and how we collapsed an intraday slam dunk signal, and we've closed below an important half-day level at 156.77. So that's a reference point for today, and you can see that target at 151.77. So that's a weekly and a half-day level. They've changed the way that they sell the burgers, so now you have to put things into a machine. They've only got 1 or 2 people at the counter. I waited 15 minutes from sausage and egg McMuffin when there was 5-6 people there on a Sunday morning in a hurry on a motorway. For me, McDonald's is, or McMurdo, is emergency food. It's got to be quick. If it's not quick, then I'd rather eat my own socks. So, and then with my grandson, wait to get 2 burgers on a drive-through. There was 1 car in front of us, 2 burgers, 2 shakes, hamburgers, so the little ones. I had to go and park up, wait. And then with my wife, a lot of emergency food recently, but more emergency food in the store. Took us about 10 minutes to get a quarter pounder, but then we saw the queue. A queue appeared after us. I reckon it's taken 15-20 minutes to get a burger. So for me, they're making more money because they're employing less staff, and they're probably wasting less food because they make it when the order comes in. But how patient are everybody? Me, I don't have a lot of patience, and I hate queuing. So for me, I'll go anywhere else really than like that. If I've got to wait, I'm not interested. So if they're doing the same thing worldwide, I think it's possibly this worries about same-store sales could well be true. But do your own due diligence and make your own minds up there. Their results are some time away, so nothing to worry about there. But it's definitely appeared on our watch list. We have been involved in it in the past. It's trading at its all-time high in terms of PE against itself, so it's pretty expensive. It's got to keep on delivering. The question is, have they saved money, and so their profits are going to go up, or have they lost customers, or have they lost more customers than that's cost? Anyway, that's probably enough waffling about McMurdo. See you all tomorrow.